So today's video is all about the importance of just understanding the top 3 financial statements. One of my biggest just issues with finances in general, not even like personal finances, yes, but business finances and money in general, is that I feel like a lot of women just do not get this information. They don't have access to it. Finance is still very much a male-dominated field, and I don't think it should be that way. So my goal with this video is basically to just give you kind of like the baseline knowledge of the top 3 financial statements. So the income statement, which is sometimes referred to as a profit and loss statement, balance sheet, and then statement of cash flows. Those 3, just understanding those 3 is key, whatever type of business or project you're trying to do, because it allows you to make informed financial decisions. You can understand key aspects of your business and the health of your business by knowing how to read each of these 3. So I'm going to do a dedicated video on each one. I'm showing you like literally line by line how to read them. I will leave those links in the description box. But this video is really just going to be high level, what you need to know from each one. Bookmark this video, save it. My hope is really that I know that not everybody loves finance, not everybody is into numbers, not everybody has the desire for that. But what I do want is that if you are trying to build something, grow your dream, I don't ever want you to feel like, oh, that's not for me. Oh, the numbers are too hard. Oh, it's too much. It's not true. If you want to build a business, if you want to start a nonprofit, you absolutely can do it. And I want you to have the knowledge and the tools so that when you are hiring people or you're working with people, you know which questions to ask. You know to say, oh, okay, what's the ROI on that? Actually, can I see the income statement? Wait, actually, you said what was that? I really want you to just have these in your back pocket so that you know, okay, no, I can do this. I have the tools that I need, and go from there. My name is Olivia. I'm the founder here at Lavi Rèv. We're a consultancy that specializes in strategic planning, finance, project management, and just giving Black and brown women the tools they need to build their dreams. First up is the income statement. So the income statement, sometimes known as the P&L or the profit and loss statement, shows revenues and expenses over a particular period of time. The key components of this statement are revenue and sales, cost of goods sold, operating expenses, and gross profit and net profit. So the income statement is really kind of like your standard bread and butter when it comes to finance. A lot of people will look at this to kind of say like, okay, where are we at? What the income statement will show you is basically how you're able to flip revenue, so money that you make, into profit, into actual gains. So take, for example, say you have a business and you make $1,000 for the month. That's amazing. Yay, you made $1,000. But if you spent $5,000 to get the equipment, to pay everybody, to all of your expenses, so that at the end of the month you're basically negative $4,000, then that's not great. It tells a very different story. So the income statement really just allows you to assess operating expenses, are like where your revenue is coming from, where sales are coming from, and if they are not in balance, why. You know, you can kind of really pinpoint line by line. And I will put examples up on the screen of an example of an income statement, but understanding how you're able to flip the money that you make into an actual profit that you can use to either grow or expand your business. Cost of goods sold is another one that I'm always talking to my clients about, particularly if you have, for example, like a wholesale brand, a fashion brand, or a health brand, like something where you have to buy a lot of product. You really need to be able to look at that number and say, okay, how much is it going to cost me to actually get the product that I'm trying to make or sell and get it to my customers? That's a really key number, particularly if you have an actual product that you are going to, sell to people. It's obviously not the same for like a service-based business. Like, for example, I run a consulting firm. My professional background and knowledge, like that's the service. So it helps in that aspect, but there are definitely still costs associated with running a service type of business. There's definitely like softwares you have to buy, people you have to hire, like there's things that go into it as well. So understanding cost of goods sold is one that I've seen for a lot of the businesses that I work with, that people tend to like overlook, or not overlook, but just underestimate how much of an impact that can have on your business. Up next is the balance sheet. The balance sheet shows assets, liabilities, and any equity over a specific time. So the equation that is associated with the balance sheet is assets equals liabilities plus shareholders' equity. The key thing that the balance sheet shows you is basically what you own versus what you owe. Assets are things like cash and property, whereas liabilities are things like taxes, expenses, equipment fees, like things that you have to spend money on in order to make, cash. And then equity, that could be like a loan from the bank, that could be from investors. Understanding the balance sheet will tell you if you're kind of how balanced your business is. So do you own enough to cover your debts? Do you have too many debts? Understanding this ratio and understanding when things may be getting too high or too low is really important to just assess the health of your business. So say, for example, you have monthly revenues of $1,000, you're doing great. You've gotten your expenses down, so you have a net profit every month of $500, but you have $10,000 in business debt. That's like an area that would be like raise a red flag as a business owner. You could be like, okay, we need to figure out how to readjust this so we don't have as much debt. It really is all about just assessing where you want to be with your business. My goal with all of this is never to be like, these are the rules, you have to stick to it and this. No. My approach to finances is definitely, I want you to have the basics so that you know how to flip it and adapt it to your specific situation. So it really depends on your risk tolerance. So some people have a really great tolerance for leverage and debt, and other people have zero tolerance, no debt, all cash. Like, they're just different approaches to business. I don't think there's one that's like better or worse than the other. You just have to find what works for you. But my goal is for you to have this knowledge and at least know, okay, this is how I want to approach equity. This is how I want to approach my assets, all of that. So understanding the balance sheet. Balance sheet is about balance, simple. Last but not least is the statement of cash flows. The statement of cash flows tracks the inflow and the outflow of cash over a specific time. And I don't know if I said that previously, but this is all over a specific time. So you'll have an income statement for, the year, whatever year. It's typically on an annual basis. It could be quarterly, and it just shows you for a specific time frame. So the statement of cash flows will tell you how much money is coming in versus how much money is coming out. The key components of the statement of cash flows are operating activities, investing activities, financing activities, and finally, net increase or decrease in cash. I don't know if you've heard the saying cash is king, but that's like a very common saying that you hear a lot in the finance world, particularly in business. It's never a bad idea to have too much cash. I think nobody would ever tell you, oh no, don't have a ton of cash. So monitoring how much cash your business has is absolutely key. I think, for example, Apple has like $1 billion in cash, something like ridiculous amount, but it's incredible to have that as a reserve because you know that you're able to invest or grow or build whenever you need to, if you're kind of sitting on that sort of cushion. So for example, with the statement of cash flows, if you look at it over a year-to-year basis, you could say, okay, the amount of cash we have in the business has gone down 50%, for example. Okay, we know that maybe next year we need to decrease expenses so that we can get cash back up so that the business is kind of balanced again. You kind of just need to look at all of these statements and find out where the balance is or where the right number is for you. What is a good amount of, cash for your business to have? What does that look like? What does, an ideal picture, what does an ideal financial year look like for you, for your business? Understanding these statements will help you to map that out. And I'm not saying that you need to have all of these, completely understood and together day one. Absolutely not. What I'm saying is understanding these basic financial principles will help you to operate when you're trying to scale and grow your business. These are the 3 statements that most investors and banks will look at to kind of determine the profitability of your business and performance of your business, right? So understanding these and how they work is absolutely key if you want to have a solid foundation for your business. And even if you're a small business and you don't need investors or a loan, understanding the mechanics, again, of how a business works from a financial perspective will only set you up for success. You'll be able to see, okay, this is where I need to look out for. I need to make sure my expenses don't get too high. Okay, I have a large amount of cash coming out and not enough coming in. Okay, I need to rebalance. It really does just kind of give you another tool to just be profitable, to scale, to have a solid financial foundation. It really is like learning another language. It's just like the language of finance. And sometimes it is absolutely overcomplicated and gatekept and for no reason. And I genuinely want to change that. So my hope is that you take all of this information and are able to just flip it and use it in a way that helps you and your business. As somebody who has made a career in banking, financial services, consulting, I don't see a lot of women who look like me. Not on the side of things that I'm on. And that's not just in New York City or Washington, D.C. That's in Paris, that's in Hong Kong, that's in Singapore. Like it's global and it shouldn't be that way. Understanding like the financial mechanics of business should not be a luxury. So that is just the basics, truly, truly top level, just what are the top 3 financial statements, why you need need to know them and some key aspects, to look out for, especially if you're building a foundation for a business, a nonprofit, literally any project that you're doing. Thank you so much for watching. I hope you enjoyed this video. If you want to learn more about Lavi Rèv, working with us, all of that, I will leave links in the description box. And if you have a business, leave it in the comments. I genuinely want this to kind of be a community, a resource for our community. So if you have a business, if you have a project, if you have a nonprofit, anything that you're doing, absolutely leave it in the description box so we can continue to support each other as we scale and grow businesses. I want you to know it's never too late. It's never too late to start. It's never too late to that business idea, that dream, that thing you've always wanted to do. It's never too late to start. You can go after your dream. It might take work and planning and being strategic and some studying and work, but it's absolutely worth it.